Guys, my name is John Reardon with Goodfellow Realty, and this is the February recap for 2021 in San Diego. We start off by discussing the year-over-year median home prices. For detached homes, we're looking at $775,000. That's up 14.8% year over year from February. For attached, we're looking at 511,000. Again, that's up 14.3%. So substantial increases, which are to be expected given the inventory levels are so low. Inventory remains extremely low. Buyers out there are struggling to get their offers accepted, and we're finding creative ways to do that. But inventory sits just below 1 month. In a normal balance market, we're looking at about 6 months of inventory. So you could tell there's a extreme shortage for homes being listed on the market. That is down 18% year over year as well. So, and that's with roughly pandemic numbers from last year. So over 100% list to ask to sale ratio, which means if a seller is asking 500,000 for their home, they are getting 500,000. So they're getting every penny and then some, which is no surprise given, again, the shortage of inventory. There, for every home that's on the market, we're seeing about 10, 12 offers come through, and many of which are over asking price. So that is no surprise either. We are continuously watching unemployment here in San Diego, trickling in at around 5% or so. We'll continue to watch those numbers as well. And then defaults remain high. However, foreclosures still are at a record low, meaning that the 90-day defaults where people are not making their mortgage payment are about at the levels of 2008 right now. However, there's no, because of the foreclosure moratorium, these homes are not getting foreclosed on. So that remains to be kind of a big uncertainty in the market, and will likely be addressed either later at around the summer of 2021 or possibly into 2022. Many of these homeowners do have equity, so it's not like they are upside down on their mortgages, etc. So it'll be interesting to see how that plays out if folks are getting forbearance just to get some temporary relief, or if they're truly in hardship. So as we progress, the spring selling season is going to be lean. We don't expect a ton of inventory to pour on the market right away. What we think about market interest rates as we slowly tick up, has that affected the buyer activity? In our experience, no. The buyers are still willing and able. They realize historically, even at just over 3% for a 30-year fixed mortgage, that's still phenomenal. And we are continuously seeing that buyer demand out there. So that's all I have for this week. I'll talk to you guys more in coming weeks.